There are multiple accounting methods when it comes to reporting income and deducting business-related expenses. And while some may offer potential benefits at times, certain rules apply when a taxpayer changes from one method to another. Roger McEowen with the Washburn School of Law joins us now with some guidance. Roger, good to have you with us. So what are some of the main accounting methods for farmers?
Well, good to be with you, Tammy. One is cash accounting, and that's where you just report income in the tax year that it's received and deduct your business expenses in the tax year that you pay them. The other primary method is the accrual method, and under that method, you report income when it's earned and you deduct expenses when they're incurred. So those are the two methods of accounting that farmers can choose from.
Now, historically, farmers have been required to participate in acreage allotments. How does that tie into all of this?
Well, that may seem to be an interesting question for farmers that maybe they hadn't thought of before, but really the question is whether acreage allotments and quotas and FSA base acres can provide a tax deduction for the farmer. And my guess is that many farmers never even thought that there might be a deduction there.
So now rules come up in a case involving an Arkansas farming operation. Give us a recap of that case.
Well, this was an investor in Farmland that cash leased the land to farmers, and they didn't claim any deduction for depreciation or amortization of the FSA base acres, but then apparently found out that you might be able to do that. And so after several years of not claiming those deductions, they changed to doing that without first getting IRS permission. Well, when you change from not depreciating or amortizing business expenses to go ahead and doing that, that's a change in accounting method. And the IRS says you have to ask them first to get permission to do that. They didn't do that, and it ended up costing them about $250,000 in taxes and penalties. And they shouldn't have been able to do this anyway because they were cash leasing the land. And if you're a cash rent landlord, you're not a farmer. You're in a rental activity, so they can't claim the deductions anyway. That was just a mess. The case should have never gotten to tax court.
Right. That is very complicated. So big takeaway here for our farmers?
Well, you just can't change your method of accounting without asking IRS permission. So make sure to get IRS permission for that. If you want to try to claim deductions for acreage allotments or quotas or base acres, make sure you talk with your tax professionals first, because there is some controversy about it. There are some cases that have allowed it. IRS doesn't like it. It kind of cuts both ways. So make sure you get good tax advice first.
That's Roger McEowen with the Washburn School of Law. Appreciate your time and input today.